Today, we're going to be talking about the November Toronto real estate market stats, the provincial and federal government policies that affect you as the home owner and home buyer. And we're going to be talking about the Bank of Canada recent interest rate hike. Let's get started. So first off, the provincial government policy approved 2 additional dwellings. So you got your main floor, but you also got your basement now and your backyard that you could rent out. Okay. My question to them really is that in the basement, people that want to rent it out would have rented out already. Okay. And in the back, are people really want to live in the back? Well, if it's affordable and it meets their needs, then they definitely should. Okay. Especially if it's more affordable. Now, they also implemented the foreign buyer tax of 25%. Okay. From 20% to 25%. And honestly, it's going to be very, very difficult, right? For people that don't have Canadian citizenship or they don't have their, PR status, PR code, that's a big, big tax. Okay. Now, the third policy that I want to talk to you guys about and have a discussion about really is a controversial issue where the Ford government has allowed builders to start building homes on the conservation areas. Okay. I know that there's a lot of protests that are going on in Ontario to fight this, but let's assume here, just for argument's sake, that the government has approved the builders to build it and they're going to do so. Is it a bad idea for them to actually allow builders to purchase the lands before anybody else? Because what builders do is they build homes, okay? And if we actually opened it up to other parties, right, that were not building homes, then what would they usually do with that land? They may just sit on the land and hope that builders would pay them off just to build the homes. And then in essence, what they would do with the builders is they would turn around and pass those additional costs to home buyers. Okay. So I don't know too much details about the whole process of purchasing that land, those conservation area lands. Like the process wasn't really transparent. I don't know who was involved, who were the other parties that weren't able to get homes, but the ones that were able to purchase land, they're able to build homes. That's their main objective, right? And that's a crisis that we are having. Okay. Now, the second government policy that we should look at really is the federal component, right? So the federal government has decided to ban foreign buyers starting in January for up to 2 years. Okay, so is there a workaround? Sure. I'm not going to get into that too much right now, but if they do work around it, they may still be hit with a 25% tax with the foreign governments. So let's just say for me, if I was a foreign investor, I would, probably look at other provinces because there's just too much red tape here, too much additional costs. Probably, go somewhere else, right? Maybe Alberta. Now, the Toronto vacant real tax just recently started implemented. So if homeowners leave their property vacant for 6 months, then they will need to pay a 1% tax. Okay. Now that's 1% tax of the municipal records. So how much you pay on property taxes, not the market rate tax. Okay. And it's very interesting because, we're talking about huge volumes of additional capital coming into the city. And my question really is, how will they enforce this? It's going to be very important to see this because we're talking about hundreds, of millions of dollars here at stake. Okay. And so here's the rule component, right? Having the law, and then the second component is the actual enforcement. Okay, so we'll see. It's interesting to see what will happen, okay, and how they will proceed with this. The next thing we should talk about is really China, right? In the past, China would shut down neighborhoods because of COVID cases and even businesses like manufacturing plants. And the good news is China has begun to ease COVID restrictions, which will stabilize their economy and global supply chain. Hopefully this leads to lower prices, but we will see. So the Bank of Canada increased their interest rate by 50 basis points, and now it's about 4.25%. Now in Canada, this is what they said on their website. In Canada, GDP growth in the third quarter was stronger than expected, and the economy continued to operate in excess demand. Okay, Canada's labor market remains tight, with unemployment near historic lows. Okay, so the word to underline here is excess, right? Demand, because that's what they've been saying the whole time, right? Excess demand, raise interest rates, excess demand, raise interest rates. And with lower unemployment rates, what happens then is going to be more money that Canadians have to spend. Okay. The second part of their report said, however, inflation is still too high and short-term inflation expectations remain elevated. The longer that consumers and businesses expect inflation to be above the target, the greater the risk that elevated inflation becomes entrenched. So it's confusing to me because they're the ones that are saying inflation is too high, and obviously that's going to ingrain that into our heads, and that's why we're expecting it to be above the target. So it's just kind of confusing when they said that. If you have any thoughts about that, I would love to hear your point on that. So now let's just get started on the Toronto real estate market update. It's going to be broken down by home type. Now, this isn't a direct reflection on your home, as there are other factors such as, location, finishes, upgrades, age of the home, and more. If you want more of a specific home valuation, contact me and I'll be happy to help. Let's get started. So in Toronto, November 2022, there was 1,798 transactions. Okay, active listings 4,931. The average home price was 1,050,788, which was a 4% decrease. Okay, the month before, and a 15% decrease at the all-time highs of February. Okay, which was 1.243 million. The type of market, actually going backtrack it, it's good to note though and put things into perspective, right? 15% decrease might sound a lot, okay? And it is, right, since February. But if you compare that number with other asset classes like stock market and crypto market, you're actually outperforming them, okay? So for example, the NASDAQ composite, which is the stock market, actually decreased by 26%. And the actual crypto market actually dropped by 78%. So in reality, the real estate market has outperformed the other marketplaces, okay, the other markets, and they're very massive markets, right? Stock markets are huge in our economy. Okay, moving on. Now, if you compare it, if you bought a home before 2019 November, you were still up by 15% on average, okay, and it is still a seller's market, guys. Okay, as long as a type of market indicates that's less than 5, it's a seller's market. From 5 to 6 is a balanced market. From 6 to 12, it's actually a buyer's market. Okay. It doesn't matter who tells you, oh, it's a buyer's market. Like even agents I talk to during our deals, they say it's the buyer's market. And it didn't go well with them. Okay. So for the detached homes in Toronto, okay, 542 transactions, 1,246 active listings, okay, which is down by 12%, by the way, okay, on a month-to-month basis. And the average price decreased by 3%, which is 1.56 million, okay. And the type of market, it's still a seller's market. Days on market, 19 days to sell a home. Comparing to all-time highs of February, right, there was more sales in February, 786, and the home prices were higher, about 2,073,000. Okay, the type of market back then was more so of a seller's market than it is now. Okay, and again, yeah, if you compare it to pre-pandemic, okay, we're up by 15% on average. Okay, there's less listings now than there was pre-pandemic as well. So it's very interesting to note that. Okay, when people are saying markets are crashing, is it really? Because we're comparing it pre-pandemic and during pandemic, and the numbers aren't as falling as fast as we anticipated. Okay, and a good note to have is that if you're a buyer, every 1% increase in interest rate leads to about a 10% decrease in the amount you can borrow. Okay, so the prices drop by 25%. Okay, we see here in February, all-time high. But the rates went up from 0.25 to 4.25. That's 4%, which means that your amount to borrow dropped by 40% since that time period. Did prices of homes drop by 40%? They did. Moving on to semi-detaches here, right? So right here, February, 169 sales, 269 active listings, the average price was 1.187 million, and the type of market 1.54. Okay, so if the numbers stayed relatively similar, okay, to the previous month in terms of the days on market, right? There is less sales, 16% less sales. Even on a year-to-year basis, it's a 40% decrease. Okay, November 2021. Now it's good to note, okay, that November 2021 and February 2022, those were very hot markets, very unsustainable. Okay. And if you owned a semi-detached in Toronto, you're still up by about 11%. Okay. So for the townhouses here, right, in Toronto, more sales happened, 67 versus 62. Number of active listings actually decreased by a bit. Stayed relatively similar though, 111 versus 114. In terms of the sale price, it's 1.224 million versus 1.28 million. And if you compare on a year-to-year basis, it actually only decreased by 4%. Okay. Again, if you look at that number versus the stock market and crypto market, you're still in good shape. Okay, so looking at condo townhouses, right? 111 versus 123, 309 active listings versus 348. And the average price was 856,000 versus 863,000, which is a decrease by about 1%. And it's still a seller's market of 2.78. Okay. And if on a year-to-year basis, right, there are more listings now than it is before a year ago. So there is more opportunity for buyers, okay, to actually look around, negotiate. I always tell my buyers, never fall in love with a property until we get the keys in your hand, okay, because that really dampers my ability to negotiate for you if you absolutely love this property. Okay, as long as the size is good, right, the bones are good, then you got something to work with. Okay. Last but definitely not least, okay, one of the most important parts, asset classes in Toronto is the condo apartments, right? 899 sales versus 888, okay? In terms of active listings, right, there are 6% decrease, okay, which is tightening up the market a little bit more, which leads to more of a seller's market of 3.29. And in terms of the average price, right, 734,000 versus 740,000, all right? In terms of all-time highs, yet there was about 58% more sales that happened in February. And on a year-to-year basis, it was 1981 sales. So it's about 55% decrease, okay? And back then, it was more so of a seller's market than it is now, okay? We are definitely approaching to more of a balanced market. And again, if you compare your figures, right, pre-pandemic numbers, there are more listings now than there were in 2019. Okay, about 73% more, right? And the prices did go up though by about 11% since then. So if you're on the fence, right, make sure you again look at the properties, look at the condo apartments, see which ones you like, the location, the views, obviously the status certificate as well, because it's very important to make sure that the condo is in good financial state. And yeah, if you find this information useful, right, make sure you share it, like it, subscribe. If you have questions, feel free to reach out to me. All right, take care. Bye-bye.